Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy, your quick snapshot at the global financial markets. And folks, on Friday there was an update on the jobs front from the US economy, which shows that the US hiring has accelerated while the unemployment also showed down some sort of a down move. Not actually a down move, but some improvement. JK, does the economy look that steadfast? Because that's what market actions have shown with the DXY rising quite interestingly. What's also surprising has been the gold and silver also rallying. On the domestic front, we all saw the industrial production also improving. So, what is your take on these updates from the macro front in the last week?
Good morning, Shikhar. Yeah, I think the job market strength cannot be ignored because it was best in all aspects. You had a rise in the non-farm payrolls by a big measure, beating the forecast by almost 100,000, and then unemployment rate also came down by 0.1%. Wages, of course, were as expected at 0.3% month on month, and so I think the concerns that Fed had been expressing way back in September about job market cooling, that has been almost nullified now. So at least going by these numbers. So because in the last week we had also seen the weekly jobless claims drop to a very low number of 2,01,000, and even the continued claims also dropped. So definitely nobody is able to see a big weakness in the official survey data that is coming out, although the home household survey is actually painting a different picture. Of course, when you deep dive into the numbers, mostly the job increases have been on sectors which are low paid jobs, perhaps temporary and all that, but at least market is not looking it at that way. They are seeing these numbers continuing to support higher consumption in the US. Therefore, it was a very clear signal for Fed to be steadfast on not cutting rates in a hurry. Market, in fact, is now looking at a first next rate cut only in June of this year, and even whether there will be second rate cut or not is something still being debated. That is how the market is positioned, and the impact, of course, was big on the yields, which were already on the upswing for quite some time. Now, before we come to the yields, let's also see the Michigan survey, consumer survey. The Michigan consumer survey did not show sentiment changing much. It was a very marginal downside, but the significant thing was the 1 year forward inflation expectations, which rose to 3.3%, and even the 5 year was at 3.3%. Now, these could have come up on the basis of expectations of Trump's policies, which is widely, discussed about tariffs and immigration policies, tax cuts, all of these leading to higher inflation. So the survey has actually led to 3.3%, which has not been seen for a long time on the expectation side. So these two factors together have pushed up the yields further. In fact, we saw the 30-year US yields almost trading 5%, but then step back a bit on profit taking, and the 10-year is closing in on 4.8%. 2 year had a whopping jump of 12 basis points to 4.38%. Now, these are the jump in 2 year is clearly a reflection of reassessing the rate cut prospects by the Fed. So definitely this is a report that was more valued by the market, because even the stock market reacted negatively to the jump in yields, because the finance costs are going to go out. Nobody is looking at the fact that this can actually eventually have a dampening effect on the economy, because the finance costs going up and the government's interest costs going up. All these things are going to be in a medium term negative for the US economy. So near term, dollar is well supported. The stock market took the good news as bad news. but the dollar has taken it as good news as good news. So that is how it was. Now, apart from those, of course, the weekend we have had the news about fresh sanctions by US and UK on Russia's energy sector, trying to curb funding for Moscow's, spending on the Ukraine war. So, in fact, they have designated some of Russia's largest oil companies who are, shipping oil. So this is something that people may not have expected at a time when the Trump's inauguration is just less than a week away. So that actually had impact of pushing up the oil prices again. Brent oil above 81, and which is already again in an upswing, rising from the recent low of 70. So that's also again a factor that could support the yields, and overall expectation is that the 10-year is targeting 5%, and more such news. I think the buyers of bonds are likely to move away. So that's how it is. Of course, this week will be a week of consolidation. We will have the CPI report, of course, from both India and US. That will be parsed for any major deviation, but then people will value it less in the context of the upcoming policies of the new government, which will determine how the inflation picture evolves later. Yes, Indian industrial production was better. There was some positive impact from the base effect, but still, I think in the last 3 months we have seen a steady rise in the industrial production. That's a good news, considering that Indian economy has been seeing some sort of a slowdown. Maybe this is an early sign of recovery in demand, but then I think we need to see many other factors to see whether the growth is returning to the mid 6.5 and about towards 7% on it. It's too early to say that. Now, speaking of the dollar overall, I think 110 was seen for a fraction of time, but then it has slipped back mostly on profit taking. This week could be a week of profit taking for the dollar. As I said earlier, we have seen almost 10% rise in the dollar index from the low of September. So it's not unreasonable to expect some profit taking, but then there are pockets of weakness like sterling, which where in the fiscal deficit in the context of a higher yields and higher debt is already playing out. The yen, where it is pushing towards 160. We have only seen some verbal intervention, nothing really that matters for the market, because unless we see a rate hike by the Bank of Japan, I don't think yen is likely to gain much traction, although yields and Japanese bonds have also gone up. In Europe, last week we had a very underwhelming data from Germany on the industrial orders and also the retail sales, not helping. Even the economic sentiment from Eurozone was poor. So overall, Euro is still struggling. And there is also this in the background, there is a sense that the rightists in the Europe are gaining ground. Elections in Germany is not far away. So we'll have to wait and see whether Euro has a bigger support coming through structural factors rather than down the cyclical factors. So that's this picture on the dollar. Consolidation, some profit taking ahead. Gold also might see some profit taking around $2,700. On the rupee, yes, we have had this big move in the last few days. Then people are actually looking to define it as effect of regime change, since December 10th. But then when I look at it, it's not necessary, because the factors that have impacted rupee have also moved much worse against it. Like dollar index from December 10th, the D-day when the governor shift happened. If a dollar index has moved up by 4%, from low 106 to almost 110, and then even the reserves have fallen by about 20 billion since then. We do not know exactly how much the forward reserves have moved. So it's not necessarily just a coincidence that in this period of Mr. Malhotra's 1 month, almost 1 month period, the rupee has also moved by about 1 rupee 40 paisa, almost like 1.6 to 1.7%. But I think it's more of factors, and to top it all, the FII outflows have continued, and this month also we have had more than 4 billion of FII outflows. So overall, the factors which have been pushing the rupee down or weaker have continued. And of course, we do see a small consolidation period for the rupee if the dollar index also starts to correct a bit, and that could be some solace for the rupee. Maybe this week we can see that, but it's very difficult to position anything for that. I think underlying trend for the rupee is still one of weakness. According to me, 86.50 remains a near-term target, after which we'll have to reassess. Thank you.
Okay, JK, that was really good. And yes, folks, on the domestic front, as JK mentioned, even though there are anticipations of some sort of structural change or the approach change by the change of governors, but overall, if you will see, as JK mentioned, DXY has strengthened by 4%, while the Indian currency weakened by 1.5, 1.6%. While there was a consistent set of FII outflows and other set of updates which kept pressure on the rupee as a whole. So, as you mentioned, it's not really necessary that there has been a change in the approach, but on the global front, if we see the fresh sanctions by US on the Russian oil, which led to the oil moving up again, for example, Brent trading above the $81 mark, can be another interesting area to watch out for, whether this kind of movement does sustain, although it is less likely considering the sort of supply there is in the markets. Overall, this week can be a week of consolidation with couple of major updates in the form of CPI for both US and India. While some sort of profit taking can also be anticipated, although it's really difficult to say from which levels, considering the kind of erratic movements we have been observing. On the European front, the poor economic sentiments keeps the euro struggle on, and whether any sort of structural factors would provide the support is something which needs to be watched out. For US, the rate cuts have been pushed to the month of rate cut expectations have been pushed to the month of June. And although there has been a significant rise in the number of jobs, but this rise has been more or less sectoral and temporary in form if we'll dig deeper into these numbers. So, the kind of cooling concerns that we had, whether there is on the jobs market or not, is something which time shall tell. So that's that for the round of updates of today, folks. We shall come back again tomorrow with another round of update. Thank you so much for joining and listening. Have a good day.